The more successful you are as an investor, the worse off you are going to be in Bitcoin and digital assets. We did some analysis of our own clients. We surveyed them, and research confidence amongst investors sits at about 4 out of 10. And then the exit strategy confidence sits at 2.8 out of 10. But these aren't just new investors. These are investors that have been investing in other markets for years. But the biggest insight that we're gathering is that consistently listening to people online that are telling you about these altcoins and giving you this hopium that the world is going in a direction of thousands of percent returns, it's just not reality. And using the same principles of investment frameworks in stock market versus Bitcoin and crypto does not work. Starting off with just looking at Bitcoin, if we dive into exactly the reason Bitcoin was even created in the first place, without Bitcoin, there is no altcoins. People forget that there's actually, thousands, hundreds of thousands of different cryptocurrencies out there. Bitcoin is the purest form of cryptocurrency. It was the first asset that was ever created off the blockchain. It was created in 2008. And the biggest reason Bitcoin was created was actually to offset the biggest financial crisis that was going on since the Great Depression at the time. In 2008, the first ever Bitcoin block that was created had in there the newsprinting here you can see around the chancellor on brink of second bailout for banks, meaning that Bitcoin was created as a non-state issued currency that could not be printed. It's completely decentralized. The reason it is so valuable is that it cannot be taken off you. What's happening around the world right now is banks are precipice of falling under. There's $38 trillion worth of debt here in the US. You've got different currencies that are imploding with inflation because of the money printing that's going on. And the reason why Bitcoin is such an amazing solution and one of the purest forms of money is that it is a digital solution that can go across borders. It is its own monetary system. And the problem it's trying to solve is that it's making it easier to transact. I can send money anywhere in the world. And then there is only 21 million that will ever be created. It's the purest, scarcest form of money. There's already 20 million that have been mined. This was only a week ago. There's already the 20 millionth Bitcoin that have been created. So there's only a million left, all right, which is wild to see. And the way the circulating supply works around a decreasing supply trend. So this is the first principle I want you to understand and learn about digital assets is that there is what's called tokenomics. There is basically math that is generated into the blockchain that then creates the value of different tokens, and they're not all the same. Bitcoin is very different from altcoins. Bitcoin is a long-term hold that we have because of its purest form of money, but then altcoins are completely different. Altcoins, you have to think in cycles, not forever. You never want to just hold altcoins because they have very, very different principles. Bitcoin, as an example here, has a decreasing supply curve. So over the past nearly now 15, 16 years, we've actually seen 80, 90% of the amount of Bitcoin that will ever be created already out in circulation, because every 4 years you get what's called the halving event. And that is where the amount of Bitcoin that gets created halves. And we're actually 2 years into this cycle. And because Bitcoin runs in these cycles, that's where you get tends to happen, a really big increase in volatility and increase of price appreciation when we hit these 4-year periods. All right, back in 2022, we peaked out. Back in 2018, back in 2014, they are the peaks of these cycles that tends to happen around that halving event, and we're halfway through. And what I believe is happening again is we're bottoming out during these periods because there's not a lot of interest. Markets are risk off at the moment, but that's going to come back over the next 24 months as the market heads towards that halving event. Because what happens at that halving event is that, again, Bitcoin circulation, the amount that it is created halves, so you get a decrease in supply. Bitcoin is not valued off the amount of revenue that is generated or EBITDA multiples, or it's not a company. There's no employees at Bitcoin. It's completely different. And when you're thinking about allocating into Bitcoin or your portfolio, how much of your portfolio should be in Bitcoin, well, it really depends on your risk tolerance, your stage of life, your risk allocation, your financial situations. But it really comes down to a couple of things. Number one is Bitcoin at the most conservative end, just having 100% Bitcoin is probably the best way to go. For a lot of people that are new, they don't want to touch their portfolio, they want to be completely hands off, having 100% Bitcoin allocation will give you asset exposure without having that risk that you have by allocating to the smaller projects. And I'd always say to people, start off with Bitcoin and then build around there. The next step is then, if you're wanting to have a more of a balanced portfolio, is that you want to have that core piece of Bitcoin, let's say 60 to 80% in Bitcoin, and then the rest in altcoins. I'm going to talk about altcoins in a second, and again, why we see investors make mistakes getting into this space, because altcoins are very different, and I'm going to give you a valuation strategy on how you can actually do that. The higher risk portfolio is the more aggressive end, where you've got maybe 30 to 50% in Bitcoin and then 50 to 70% in altcoins. And the reason is that altcoins are essentially like a venture capital investment. You're going to have a lot of different investments. They carry far more risk. The potential for reward and return is far higher if the project succeeds, but 9 times out of 10 they fail because they're basically early stage investments. And these altcoins, that stands for alternative coins or altcoins, like Ethereum, Solana, Cardano, there is AI projects. There's a range of different altcoin projects that you can invest in, but 95 to 99% are actually worthless. And you want to have diversification in these plays, fewer positions, high conviction, but you don't hold for a long period of time. Those high conviction plays can make you a lot of money in this space because ultimately they are driven by speculation, but also when you do get an asset that creates product market fit, then you actually can make a lot of money. And it's important to note that during these periods periods of these growth that altcoins act as like leverage positions. Altcoins will actually return a lot higher. All right. In 2021 and 2022, I personally made a lot of money in altcoin projects that was in the metaverse back then. It was when Facebook renamed to Meta. There was a lot of cryptocurrencies that were building online metaverses, and we were investing into that quite heavily back in 2020, and market grew really heavily in the year after. Another altcoin that's done really well for us recently is Hyperliquid. So Hyperliquid is a cryptocurrency exchange, but you can also trade oil, stocks, gold, everything on a derivatives exchange 24/7. It's not available in the stock market to trade that. The market never closes, and that's why Hyperliquid has done so well. That is another cryptocurrency. But the point being is when you're looking at these altcoins is that they have what's called token economics. And if we look at something like Hyperliquid has some of the best token economics that there are in the market available. And the reason we bought in at, I think it was around $22 or even a little bit less around here last year, is because the amount of supply, that one that I was talking about, Bitcoin, Hyperliquid has a very similar token economics where the amount of tokens that are created is generally quite small. A lot of the tokens are already in circulation, and the revenue Hyperliquid creates goes back to the token holder. Now, that is a very strong project dynamic when you've got these altcoins that have token economics that drive a lot of the revenue back to investors. But Hyperliquid is an outlier. 99% of projects that are in the cryptocurrency space have really, really poor token economics. What does that even mean? Well, this is like when you're evaluating a stock, you go through and you see the revenue, the margins, the profitability, the team, product market fit. A lot of these cryptocurrency projects don't have product market fit. There are no users. There's very little revenue. But the other thing they do as well is that they increase and create tokens. They essentially create their own currency. And by doing that, what ends up happening is that it inflates the amount of supply that is in the market. All right. So like as an example here, you can see on some of these projects that we have what's called the unlocks. And these projects have big unlocks that continue to come out. So there might only be 50% of an altcoin that has actually unlocked those tokens. And as they come into supply, there needs to be a lot more demand to buy those projects. When the market goes down, like we are in now, which happens very regularly, altcoins sell off the hardest because there is more tokens that need to be bought to keep that demand high, but there are no buyers because people disappear and don't buy crypto when the market goes down because they get bored. And what happens is that these projects need to pay for themselves. They need to pay for their staff, their team, product development. So they create more tokens into the market to sell to then pay for their expenses. But by doing that, they're devaluing their own token. It's like fiat currency. It's the same thing. They print more money to be able to do more things with it. That is the opposite of Bitcoin. And that is the inflation rate that you see here. The decrease, this is the inverse chart, Bitcoin in the orange here, going down, and the increase of supply because there is less supply and more demand pushing Bitcoin up, which is the opposite of altcoins. That is really, really important to understand that. Initial tokens and the way these allocations work is very different by different coins. And you can see here, this was the initial token allocations for different altcoins. You can see for Ethereum, 80% of the market was available to buy from public. They kept about 20% versus something like Cosmos, who kept 30%. Internet Computer was one of the wildest ones where they only sold 20% to the public and kept the rest of themselves. So it's like basically selling a portion of the company, holding the rest themselves, and then constantly selling those shares into the market. That is going to put a lot of sell pressure into the market and ultimately drive demand down. So when you're looking at an altcoin and a basic framework, one of the things I like to go through is our ultimate checklist. And our ultimate checklist is a process of looking at the different areas of an investment of a project to ensure that we're actually ticking off the things that drive value for altcoins. And I'm very selective on buying altcoins. The reason I buy altcoins is, again, to be able to build my Bitcoin stack. And I'm very selective on when I buy and sell these coins, because if you're holding these altcoins in a downwards period, you're going to lose a lot of value. As you can see here, like in the blue line, this is the altcoin market cap versus Bitcoin. You can see the gap and the difference of what happens when we start to see selling off. Altcoins sell off a lot harder. So one of the things I like to do is not only the market and kind of where we are at a macro level and where we are in the cycle, but going through my fundamental checklist. And this is a core difference and reason. And again, that's the biggest mistake I see investors make when they get into crypto, is they're not understanding the difference of Bitcoin and altcoins, and they're not understanding what makes a good altcoin from a bad altcoin. And ultimately, looking at the fundamental side, you've got those things I just spoke about around the token, but really the use case and the product market fit. Is this product actually being used by people? At the end of the day, these are early stage startups, and you want to rely on investments that are going to give and drive value to the world. There's only been a few cryptocurrencies that have actually generated value to the world. Polymarket is one where you can trade and do prediction markets. Hyperliquid is one. You've got Ethereum and Solana that are actual blockchains that people are using on top of. They're like the App Store where you've got apps building on top of. These are blockchains that people are actually utilizing versus other other coins that have no real value, no real users, they're the ones that are going to sell off the hardest. And that is why projects, widely vary when getting into this space, and they're very, very different to the stock market. And it's very, very important to understand and analyze these things before going in too hard and just following an influencer blindly online. So if you want this checklist, we've got every single step of the fundamental approach, the technical analysis approach, and the sentiment. I'll put a link in the description below. We can go check that out. So just remember, when you're getting into Bitcoin, getting into crypto, altcoins and Bitcoin are very different. The biggest mistake I see investors make is thinking they're all the same. They are not. The reason we're all here is because of Bitcoin, and without that, there is no real cryptocurrency space. Bitcoin for me is the purest form of money. It's going to continue to grow. It's one of the most purest forms of capital that I believe is going to be in the hundreds of thousands of dollars in the future. Altcoins, though, we need to be a lot more selective around when we buy and what we buy, because you're going to lose a lot of money if you buy at the wrong time. If you want that checklist, as I said, it's in the link below. We've got a lot of other videos on the different altcoins that we're investing in. You can check it out on the channel. Otherwise, we'll see you on the next video.